Welcome back to the channel, guys. So on today's video I'm going to be showing you guys how to frame your bias from the weekly time frame to the daily time frame down to 15-minute time frame or 5-minute time frame where you can take entries. Now, so I'm going to be starting off with the weekly time frame, right? I'm going to be starting off with the weekly time frame, and you can see on the weekly time frame you can also go down to the monthly time frame, but it is very unnecessary. I think the weekly is enough. So on the weekly time frame, we took out this liquidity, right here. You can see the high of the candle, is 1.81573, and the high of this candle is 1.81627. Which one is higher? 5. So this one is higher, right? This candle is slightly higher than this one, so which means we swept liquidity. And last week we traded a little bit bearish, and this week, which means I'm going to be expecting what? I'm going to be expecting bearishness down to this, down to this level, right? I'm just going to change the color so that it's going to be very visible. Now this is the first thing to do, right? This is the first thing to do. Now, how can you frame a setup on Friday? Now, it's very important to understand that. Remember, we are bearish on the weekly time frame, right? We are bearish on the weekly time frame. How can you take trades knowing your bias and for intraday traders, right? So remember, you're going to what? Let me just walk you through Friday price action. I'm going to walk you through price action. Now on Monday we are bearish, Tuesday we are bearish, Wednesday we are bearish, Thursday we are bearish, and on Friday we don't know how the markets will play, but I'm bearish on Friday. Now what are the PDRs? If we are bearish, now the next question to ask yourself is, if we are bearish, where will price respect before going downwards, right? Now you can see that we have this daily imbalance. This is the daily imbalance, right? Now remember, we want to catch this Friday trade, this Friday candle, and now this Friday candle has not been printed. It has not been printed. So let's just assume it has not been printed and want to catch this Friday move. So the first thing to do is, well, mark out your POY. Many people call this POY, but this is just a resistance level. A resistance level simply means your price could react from, or a support level. So for now, since it's above, this is a resistance level, which means we don't want to see price trade above this level right here. So this is the first thing we are seeing. We are seeing a resistance level, and now since we are seeing a resistance level, our idea is price to get to this resistance level before retracing downwards to take out this previous day low. Now let's go down to the 4-hour time frame. Now when framing your bias, using the 4-hour candle is very important. I love using the 4-hour candle because it's very important, right? The 4-hour candle is like a safe haven, should I say a holy grail stuff, if you know how to use it very well. Now this is where markets opened, and this the second candle, and this is the third candle, and this is the fourth candle, this is the fifth candle. This third candle you're seeing right here is usually London session, right, which is from 1 a.m. to 5 a.m., which is London session, and the fourth candle, which closes around 8 a.m. in New York time. And this is the fifth candle. The fifth candle usually opens during, not usually, it opens during 9 a.m. sharp, 9 a.m. during New York time. So this is what I do. Immediately I know my bias, I just come into the 4-hour time frame and start looking for these candles to print. Right now we've printed London 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 candle, which is, let's go into the 1 hour. Now that London candle I told you about, this is it. It's from this candle from 1 to 4. Remember, that is the 4-hour candle, which it simply means in the 1 hour time frame. In the 1 hour time frame, it simply means four candles, right? Which is this one. This one is number 1, number 2, number 3, and number 4, which is 4 complete. So let's go back to the 4-hour candle, which is this candle right here. This is London candle, and if you go down to 1 hour time frame, it represents 4 candles: 1 a.m. candle, 2 a.m. candle, 3 a.m. candle, and 4 a.m. candle. And this candle right here starts during 5 a.m. This 5 a.m. I'm telling you about is New York time. You need to set your time during New York time. You can see my time is currently at New York time. So now the next thing I'm seeing, if you look very closely, is what we are seeing: this 4-hour fair value gap. Remember, this thing I'm trying to show you guys, it takes time, right? It takes time. You won't learn everything today, so it takes time and a great deal of study and watching your charts, right? The more you look at your charts, the more you see these things happening. Before I could anticipate things like this, I've seen it over and over and over again, and that is why I only do what works. I don't need to complicate things. I only come here and do what works, right? That's why I said, if I found my bias, all I do is come down to the 4-hour time frame. I don't need to go down to the 15-minute time frame yet. I just need to come to the 4-hour time frame and watch this candle print. Now I'll watch this candle to print, watch this candle to print, and watch this candle. And while they are printing, I'm seeing what they are doing. I don't know if you understand. I'm seeing what they are doing. I'm reading them effectively to see what the market is telling me. Now, since we've had this London candle, now the next candle, which is this candle, you can see that we traded above this London candle, which means we took our London high. Took our London high right here. We took our London high right here, and we rejected very, very nicely. If you look very well, you can see it. We rejected very, very nicely. So, which means the chances of price getting here is very, very less. The chances of price getting here, let's say 10%, right? So to me, I'm just going to claim this, and this 4-hour POI, this 4-hour resistance level is the real deal. So all I'm going to do is now go down to the 15-minute time frame. Go down to the 15-minute time frame and look for what? And look for entry to short this market, because I'm bearish, right? Now remember, this is our London high, which we have swept already. Which is buy side liquidity. I'm just going to bring this thing here so that it doesn't get really chubby. This is how I like doing it. So now another thing to understand is time. Time is very, very important. time is very, very important. It's always time and price, not price and time. It's time and price. So this is what I'm going to be looking for. Now, because we rejected nicely on this candle, I'm going to be anticipating, I'm going to be trying to catch this candle right here. I don't know if you guys are flowing up. I'm going to be trying to anticipate this candle, to catch this candle. Now remember, I watched this candle play out, I watched this candle play out, I watched this one play out, and this one swept this London candle and we rejected very nicely. Now my job is to what? Is to anticipate or predict this next candle, right? Now if I'm bearish, I don't want to see price take out this high. If price take out this high, that means I'm wrong, which is okay. So let's go down to the 15-minute time frame. Now remember, I'm trying to catch the fifth candle on the 4-hour time frame, which usually starts at 9 a.m. in the morning. It usually starts at 9 a.m. in the morning, right? 9 a.m. in the morning. Now this is the candle. Remember, this is 15 minutes. So this is 15 minutes, and I'm trying to catch the 9 a.m. candle down to this blue line, down to this level, right? I'm just going to remove this because I believe you guys already understand. So the 9 a.m. candle starts here, right here, and now what I'm going to look for is what? Market structure. Now you can see we swept London high, we retraced, we swept, we broke, we made a shift in market structure, which is this right here. That's the shift in market structure, right? It is not a break in market structure, it's a shift in market structure, which means price want to reprice going bearish. So this is a shift in market structure, and all I need now is to catch this candle. And you can see that during 8:30 we retraced back to this way, back to this other block. We retraced down to this other block. This is also an other block, but price didn't get there. Price get there. Okay, price got there. So I'm just going to remove this one. We retrace down to this other block, and now because I'm looking for the 9 a.m. candle, I'm just going to take my trade here, because now I understand. What I understand is we've swept liquidity, we've made a shift in market structure, and now price is retracing, giving us fair value to get in, right? So I'm just going to catch my trade on this next candle, which is exactly 9 a.m. targets right here. I remember this low you're seeing right here was where? Was our previous day low. Our previous day low. And now if I'm taking this trade, my stop loss will be right where? Will be right here. My stop loss will be right here at the bodies of this candle. My stop loss will be at the bodies of the candle, not at the tip. The bodies is okay for me. So this is going to be the framework. This is going to be the ideal trade. And you can see we also have this fair value gap right here. So this is the trade, right? Now you can see this trade is 1:3.3. So this is a very, very nice setup. This is a very, very nice setup. And you can see we worked our way from the daily time frame to the 4-hour time frame, and now to the 15-minute time frame where we took our entry. So this was the low, which was our previous day low. So we worked our way from daily down to the 4-hour time frame, down to where, down to 15-minute time frame, where we took our wonderful setup. So these things are very simple. It takes a lot of practice, and it takes um time as well. The more time you spend with your child, the more you get to see these things. And you don't need to trade all the time, but during weekdays like this, during Saturdays, during Sundays, this is where you go into your chart and start studying price action. The more you study, the more data your brain accumulates, and the more you start seeing these things. So this is all for now. If you have any question, don't forget to ask. I'll see you on my next video. Peace out.